With the media headlines everywhere suggesting that we are headed towards a recession here in Australia, it's important that we prepare adequately. What I want to do is go through in this video with my trusty whiteboard exactly how I would position myself with a recession-proof portfolio. Now this could be perfect for you if you haven't even started investing, but if you have started investing and you've got some assets, it might be worthwhile just to check out what I've got in this video just to start making you think about the worst case scenario, because it is very possible. If you are interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, about 40% of you that watch the channel haven't actually subscribed. So I'm gonna give you a chance right now, smash that red button because you wanna be notified as soon as I drop videos like this, because then you can get ahead of the mass majority. So with that, let's continue. So what is a recession? A recession is when two negative quarters of GDP growth are recorded. So essentially, if the economy is contracting and it happens for 2 quarters in a row, that means we've officially entered a recession. Here in Australia, it's looking very likely that we will head that way, but it's very different this time. Not all recessions are the same, and this one will be different. We have huge amounts of inflation, we have unemployment at record lows, and you still have our central bank rates at less than 1%. It is very different to when we've gone into a recession before. Now, with saying that, we can use historical data to predict what could possibly play out, but this time is very different. If you're someone sitting there and saying,
"Hey man, like you're young, I did this like 30 years ago, you don't know anything."
Now granted, I'm not young enough to remember when Australian interest rates were like 17%, but this time is different, and it's very important we know that, because what worked 30 or 40 years ago will not work today, and that's why I'm making this video right now. So, the current state of the economy is that inflation is running wild. We know that inflation is being blamed on things like the Ukraine and Russia conflict. However, we also know there's supply chain issues, and on top of all of that, we had the money supply go through the roof because we had the governments pay us to stay at home. So we are seeing inflation at record high levels. What does this actually mean? Well, it means that our dollar is losing its value over time, a lot faster more recently than it has previously, because we've printed so much more money. When we look at property, we've started seeing a slowdown in growth. We can see that Sydney and Melbourne went through this massive boom, but what we've started seeing is this starting to plateau, and now we're starting to see that pull back. Could this continue further? Well, I'll discuss that in a little bit once we talk about the relationship of interest rates as well as what's happening on the macroeconomic front. But what's important is that these are generalized numbers. We can go and sit there and say, well,
all of Sydney's going down, or all of Melbourne's going down. Units are crap, houses are great.
But when you start getting into specific suburbs, you will actually find that some suburbs have actually been growing by 15 to 20%, and they could be units in some suburbs. So this is why it's very important why you have the right team and people that have actually gone out there time and time and done it again. Because if you see some of the data that I see, you'll be like,
that's telling me one narrative.
And then you realize
that it's probably not the right narrative.
And that's how people get screwed over with the wrong type of asset. If you are interested, this is a shameless plug. If you need the help, there is a link in the description below. We can jump on a phone call and figure out if our buyer's agency can actually help you. But with the buyer's agency, I gotta let you know, we don't buy in Sydney and we definitely don't buy in Melbourne. We focus on regional areas as well as other metro markets around Australia. Why? Because we know that cash flow is very important, and I'm about to touch on that in a little bit. When it comes to interest rates, we've seen one thing happen, and it's been consistent over the last 30, 40, 50 years here in Australia, and that is we can never go and create higher highs. Now, you'd be mistaken to think I'm talking about crypto.
No, crypto shit. It keeps dumping.
Now, jokes aside, interest rates have actually been going down. Every time we've seen an increase, we've never been able to maintain that in the economy, and we start seeing ourselves fall again. We've seen this time and time again. Now we've started to see it increase again. How long is it before we find out the economy can't sustain itself and we have to move to lower lows? The question that comes up with this is that if we've gone to 0.1% being the lowest our cash rate has ever been in Australia, and now we're increasing, how much lower can it go? Well, negative interest rates around the world actually have played a part, and this could be possible in Australia, but if you were to listen to media headlines, it's definitely not possible because we're going to 17% interest rates. Now, if you're interested in my deep dive analysis on interest rates, definitely subscribe to the channel and have that bell icon on. I'm working on a video right now where I'm doing plenty of research to get it all together and bring it to you guys. So by knowing all of this, what are we actually going to be doing to prepare for what the recession could look like? Well, if we see a full-blown recession, that could mean unemployment starts going higher because the businesses that have debt can't actually go and sustain those monthly repayments. They start losing out on their net profit, which then turns to them reducing their expenses. We've already started seeing this around the world when you've got big companies like Robinhood and Gemini going out and getting rid of some of their staff, as well as some others that have reduced their marketing spend, and other companies that have drastically reduced their marketing budgets. This is all in anticipation that we see a slowdown in the economy. People want to save more and they can't spend enough. In this case, because inflation is so high, you've got some people sitting in the middle and going, well, if I save my cash, I lose. If I invest in something and the market keeps dropping, I lose there as well. So what are we doing? Well, during recessionary times, we know that cash is great. However, cash flow is king. This is a big misconception I've seen over my time of investing, where people think cash is great, cash is king, that's what I'm focusing on. But what we want to know is, how do we have streams of income, multiple streams of income, going and providing us enough income for our expenses? Having cash sit there means that at some point it's getting devalued, as well as I'm going to run out of this. But if I can build a machine and that machine provides me cash flow, it doesn't matter what's happening in the macro, as long as I can pay my expenses and I can do that passively, that is the goal. And in order to do that, my allocation for this would be to look at real estate first and have an allocation of cash, which would be much smaller. And then I would also have crypto or alternative assets. Now, why the reason for this breakdown? Look, I'm not qualified to give you financial advice, and this is my disclaimer. You should use these videos to prompt you to have the right discussions and start your research process. You can't simply rely on some guy wearing a black t-shirt on YouTube talking to the screen. Like, what the hell? So in this case, why am I going for real estate as my largest allocation? That's because I believe cash flow is king. What I can do with my real estate is that if I can go and buy in a good location that's affordable, I will find that during recessionary times, these bread and butter properties actually have more demand than the ones that are in more affluent areas. And that's because when we head into an environment where the economy is contracting, you've got the actual RBA going and increasing interest rates, you see borrowing fall. So could you see a couple that could afford, say, $1 million worth, now have their borrowing reduced to $920,000? Yeah, you could. And that's where we see the drop in 8%. However, if you now flip the situation and go, well, if less people can buy in the upper quartile of that market, it means there's more demand in the more affordable market. And this is why we see continued sustainable growth in this market. I like buying properties between $300,000 to $450,000. And you're probably wondering, where the hell do I find that? That's why we got the link in the description below. Hit me up. But with the real estate, that ensures that my money is protected against a hard asset. And although we have predictions coming out suggesting that the whole market's going to drop by 10 or 15%, I highly doubt this given how low supply is, and incoming supply with construction costs increasing is going to prove that thesis is incorrect. But we'll see how that plays out in the long term. The real estate allows me to earn my cash flow of about $100 per week after all expenses. Having a positive cash flow property allows you freedom to do that. So now that I've got that income coming through, I then also have cash. Why cash? Well, despite the fact that inflation's eroding my dollar, this allows us to go in, buy up the assets that we actually want, and as part of our dollar cost averaging method, we can go out there and start building for the next phase in this economy. Now, the smallest allocation in my portfolio is for crypto and alternative assets. As soon as I mention crypto in my videos, I probably get 10 people smash the dislike button, but we're gonna do the opposite. We're gonna smash that like button so that we can share these videos out to more people that really need it. Now, when I talk about crypto, we've already had a retracement on Bitcoin by more than 50%. Then you look at altcoins and they've dropped by 80 to 85%. We can see that all the charts are indicating that we're oversold. If you are interested in my bear market strategy for crypto, definitely go check out this video. I share a lot more insights as to what I'm looking at over the next couple of months. But if you believe in the long term of crypto and Bitcoin, then it could be a really good time to start dollar cost averaging and allocating a small percentage of your portfolio. I've also got alternative assets here. Why? Because things like Pokemon cards, apart from the fact that it makes other people laugh at me, it has also produced great results in a year where most of the stock market and crypto market has bled. In some cases, some of my holdings in Pokemon cards have increased by 40 to 50% in just the last 4 months alone. So it's very important that instead of going out there hearing something you don't know about and saying,
that's a scam or a Ponzi scheme,
maybe it's worthwhile asking those questions and figuring out how to get in the right conversations, because this stuff's happening. Now, as I mentioned, with the property, you can't just go out there and buy everything. You want to go into an area where you're finding that there is rental demand. So what we're finding is the properties we buy for ourselves and for our clients, the rents are going up. This is because the vacancy rates are so low, meaning there's not enough properties for people to rent. That is driving up the price of rentals in these areas. In addition to that, because people can't rent, they want to also buy. When they can't buy, they want to rent. And this starts creating this cycle where it starts pushing up these prices even more. To add to the entire equation, you've got supply going down, given the fact that people that are buying don't want to sell, and people's desire to actually go and build more homes and developers to go into these areas has actually reduced significantly due to the cost of building. So you've got supply going down, you've got people wanting to live in the area, but they can't. And with demand being affected by the fact that interest rates are increasing, it might actually have the opposite effect when it comes to affordable markets, as I discussed earlier. So we can well and truly see demand actually increase during these times. Now, the final point I'll make is that with cash, I always want to have an emergency fund. It's very important to have this because you just don't know what's going to happen tomorrow. Having that money stored away somewhere just seems like the most common sense move to make at this time. But I also want to have some allocated there as liquid cash ready to go and buy the dip that, of course, we know keeps dipping. When it comes to crypto, if you believe in this debt-based Ponzi scheme, which is our currency, as well as how the economy is run on a debt-based system with modern monetary theory, you're going to understand why Bitcoin is so important in the larger scheme of things. If you guys have enjoyed this video, smash that like button, subscribe because you know you want to, and I'll catch you guys in the next one. Thanks, guys.